Today we're going to be talking about some of the best tax deductions for small businesses. Hi everyone, my name is Ben, and if you're new to this channel is dedicated to all things personal finance, helping you earn more, spend less, and invest the difference. Now for most people, taxes is going to be your single largest expense that you will ever pay in your lifetime. You're going to pay more in taxes than you will for rent, food, healthcare, etc. So if you can eliminate or at least reduce the amount of money that you pay in taxes, you can dramatically increase the amount of available money that you have for things like retirement, travel, all that kind of good stuff. So number one on this list is going to be the home office deduction. I think everybody should be taking advantage of the home office deduction. Essentially what this is let's say that you have a spare bedroom in your house and you set up an office right there in your house. Maybe set up, a computer and a desk and that kind of stuff. If you use that room exclusively for business purposes, then you can write that area off as a home office deduction. Now there's two different ways that you can calculate this deduction. You can calculate the actual expenses, or for most people it's easier just to take the simplified method. And the simplified method is essentially you get $5 worth of deduction for every square foot of your office space, up to a maximum of 300 square feet. So for example, if your spare bedroom is 10 foot by 10 foot, that means your square footage is 100 square feet. So at $5 a square foot, you would get a $500 tax deduction just for that home office. Number two on this list is going to be mileage. Any amount of driving that you do for official business can be written off as a tax deduction. Now, once again, there's two ways you can calculate this. There's the actual expenses where you have to keep receipts for things like gas and oil changes and all that kind of stuff. But realistically, most people aren't going to do that. Once again, they're going to take the simplified deduction, which when you're filing your taxes here in April of 2021, so you're filing for the year 2020, you get 57.5 cents per mile that you drive as a tax deduction. So for example, myself, I'm in real estate, so if I go out and travel and go check up on some of my rental properties, that is going to be tax deductible. If I have to go to Lowe's or Home Depot to pick up supplies, the mileage that I drive to Home Depot is tax deductible. If I'm driving around town looking at new properties that I might be interested in buying, once again, tax deductible. So hypothetically, if we just keep the numbers nice and neat, if I drive 1,000 miles for the year, then I could deduct $575 off of my taxes. Now, some people might be able to combine this mileage with the home office deduction in some pretty crazy ways. So typically, your commute to and from work is not tax deductible. So if you own your own restaurant and you are driving to work in the morning, that is not tax deductible. That is you commuting. That's you going from home to work. But if you have a home office for that restaurant that you own, now suddenly you're not going from home to work. You're going from your home office to your corporate office. So now you're not commuting anymore. Now you're going from one business office to another business office. And now those miles are suddenly tax deductible. So if your corporate office is even just 10 miles away, that's 20 miles round trip, and you do that 5 days a week for, let's just say, 50 weeks out of the year, you could come up with almost $3,000 worth of tax deductions just based on your mileage going from your home office to your corporate office. Number three on this list, travel. Now, travel is one of the best ways that rich folks use and abuse the tax code system. So any traveling that you do outside of the city is tax deductible as long as it's actually as a business expense. Now, like I said, I own real estate, and I've had to move around the country because I'm also in the military, so my rental properties are scattered throughout the country. So if I want to travel back and see some of my old buddies and friends in a different city that I used to live in, I'm not going to visit my friends. I am going to check up on the status of my rental properties. And while I'm there, I just happen to also have a few beers with my friends. So now, since it's no longer just a vacation, now it's an actual business trip, now all of your travel expenses may suddenly qualify as being business tax deductible expenses. So things like airfare, hotel stays, rental cars, meals, all of that stuff now may qualify as a business tax write-off. Now, things like your airfare and hotel stays, the bills for those are relatively large, and so it's really easy to just keep track of the receipts and itemize those. But for meals, it's a little bit harder because that means you got to keep all of your different receipts, and that becomes a little bit cumbersome. But what you can do is you can actually go online and find the approved per diem rates for whatever city that you're going to. And then you can just simply claim that amount every day that you're working on your business trip. And then you don't have to keep any receipts for your meals. And this can be especially nice if you're eating on the cheap. So for example, if you're traveling to New York City, then you would get about $76 a day for per diem. So it doesn't matter if you actually use the full $76 or not. You might just be sitting in your hotel room eating ramen noodles and spending less than $5 a day, but you can still write off this full $76 as a business tax write-off for your meals. If you're interested, I'll leave a link in the description where you can find these per diem rates. And some of the ways that people take advantage of this travel tax deduction is, let's just say that you run a YouTube channel documenting your travels to all sorts of exotic locations. You go to the Bahamas, you go to Paris, you go to Australia, and you're just constantly traveling the world. Well, if you are documenting and blogging, vlogging, creating YouTube videos, whatever it is, about your travels, then now it's not a vacation. Now it's you taking a business trip and creating new content at each location that you travel for your business. So now it's not vacations, it's now a fully taxable deduction. Up next is going to be the QBI, or the Qualified Business Income Deduction. Essentially what this means is that, assuming you don't make a ton of money, there is some income limits on this, but you can usually deduct 20% of your qualified earned income for your small business and just have that as a flat tax deduction. So hypothetically, if you're creating a YouTube channel and let's just say you make $10,000 for the year, then you would instantly be able to claim a 20% deduction on that $10,000. So you could instantly write off $2,000 under this QBI. Number 5, continuing education. So no matter what your business is, as long as you are investing in yourself and expanding your skill set and those skills relate to your business, then those education expenses can be tax deductible. So for example, I am in real estate, like I said, and I have a lot of real estate books that I've bought over the years, so all of those books are tax deductible. I took a class on public speaking to help improve my sales pitch and presentation techniques, and so that class I was able to write off as a business expense. I took the North Carolina State Real Estate Agent licensing exam so I could become a real estate agent to save money on my purchases in real estate. And so the cost of that class and the test and the books and all of that stuff, I was able to write that off as a business expense under continuing education purposes. And up until coronavirus hit and ruined everything for us, I was planning on taking a cruise in about a month or so from now. The National Association of Real Estate Investors was hosting a conference on a cruise line. So in a case like that, I'm not taking a personal vacation and going on a cruise. I'm attending a real estate conference and continuing my education by learning more about real estate. And this conference just happens to be on a cruise, and therefore the entire trip is tax deductible. Number 6. Office supplies. So anything that you need to actually run your business and get it set up usually is going to qualify. So if you had to set up your home office and you went out and you bought a computer specifically for that, guess what? That's tax deductible. If you bought a desk and a chair and paper and ink cartridges, all that stuff suddenly becomes tax deductible. So here, while I'm running this YouTube channel, I had to buy some studio lighting. I bought a tripod, I bought this piece of artwork over here. So I bought a few things to serve as part of my YouTube business, and I was able to write those off as office supply tax deductions. Number 7, cell phone and internet. So basically what you are going to do with this is you are going to create a ratio of how much you use both of those items for both your business and for personal use. So for example, let's just say that you use your cell phone on average 20 hours a week for business purposes and 10 hours a week for personal use. Then 66% of all of your costs associated with your cell phone, 2/3, would be tax deductible. So if you went out and you bought a new iPhone for, let's say, $1,000, then $660 of that would be tax deductible as a business write-off. And 66% of your cell phone plan would once again be tax deductible. Same thing goes with your internet. Calculate how much you're using your internet at the house for business purposes and how much you're using it for personal use and create a ratio for that. So as you can see, guys, once you own your own small business, you can make a lot of different expenses suddenly turn into business expenses. Now, I'm not a CPA, I'm not an attorney, I'm not a professional tax guru. Obviously, you're going to want to consult your own professionals. This video is intended for entertainment purposes only. But if you did enjoy the video, be sure to subscribe, leave a comment down below, give it a thumbs up for the YouTube algorithm, and as always, I'll see you all again next time. Thanks.